All right, so we're looking at the market potentially making a bottom here. You can see we had divergence off of our 165 EMA. You can see all of our synthetic triggers are now above support.
Order pending.
So wanted to give you an example of a limit order entry. So what we're attempting to do here is to buy Fibonacci support with all of our first synthetic triggers coming up above it. Right, and again, we've made a triple bottom. The market can't get through the larger synthetic trigger lines. The smaller synthetic trigger lines are crossing back above one more time above support. So if we can get a pullback into the support area, we should get a long trade. I guess we can put it around maybe a tick or two above support. Now, before we get into this trade, this is our target. So we're looking to trade up to Fibonacci resistance here. So put this on pause until we actually get something to happen here for the sake of the video time. All right, and you can see we've gotten filled on our position. Typically, I've got a standard 20 tick first profit target in. So if you're trading two contracts, I end up with an 8 tick stop, right, which is what I like to start out with. I want you to also notice, look at my small triggers as we pull back into Fibonacci support here. Again, the fact that they're still crossed up and that they're well above our synthetic triggers leads us to believe that the market should go up from support. Granted, it's coming down a little bit further than we anticipated, but as we start to trade up, we can start to think about this low pivot now. So we want to trail our stops behind pivots. Right, so obviously this is going to be, if it goes up to resistance, a big move. So right now, all in all, minus any slippage, we've got 6 ticks worth of risk. So $60 a contract. We've got our first profit target in. Obviously you can go anywhere that you want to go. 20, 25 ticks. Typically the market in crude oil, makes 25, 30 tick moves most of the time. So, right, and if it goes where we think it's going to go, from support all the way up to resistance, then that's going to be a good thing. As we progress up a little bit further, you can see my synthetic triggers in mid-band here moving up. So I've got myself actually locked into a little bit of profit now. We're just going to work on trailing our stops. So if we get a pullback and we get new pivots, we're just going to continue to trail our stop behind pivots until one of two things happens. We get stopped out, or we make it up to Fibonacci resistance up here. Now we are coming up on the 8 o'clock hour. Now at 8 o'clock, Fibs will update. We've got our Fibonacci set to dynamically update at 8 o'clock. So you can see we've got a new Fib up here at 86. Let's see where our multiple time frame support is. A lot of times when you get these moves, and you can see we got a new pivot, so we'll trail our stop up a little bit. A lot of times they'll make it up to multiple time frame resistance. Oh, we got a new resistance here from our 8 o'clock. We'll trail our stop up a little bit tighter here. Obviously, it looks like small triggers are getting through it, so we'll see. And if you want, with that new resistance,
Target filled.
we take one off. All right, so there's 26 ticks on the first one. And we'll go through, and at 86, all right, we'd like to make it to multiple time frame resistance. Obviously, that's the key, but if we get to 86, we'll get greedy with it. We'll just get to 86, and we'll go to the first resistance on this second one here. So we're watching for, right, and let me go back just a little further. If you weren't in from, down here at the bottom, and you can see our fib to fib pattern really is beneficial, coming off of this last pivot low at the 25 buy line, closing back above all the triggers. If you missed, getting in at the spot, this would be a good entry. If you didn't get in there, right, where I've got my stop right now is basically a best look trade. Right, so a lot of times you'll add on to a position if if you get a best look, or if you took a profit, you can get back in that second contract again with a best look spot. And the reason it's a best look spot is pretty simple, right? Small triggers are up strong and above all of our synthetic triggers. Right, so the market pulls back into this area, again, stop would have been below the pivot. So if you got in, roughly 33, 46 or 47, right, you'd have a 4-tick stop, assuming that this was your initial entry, not back here at support, right? And you can see we've hit this this first resistance that popped up on us at 8 o'clock. Obviously, we had a lot of room to the next targets when we were watching this position. So we've got really strong small triggers. Right now, they're physically above the resistance. If they cross back down below the resistance by much, it's probably going to be party over here. So if we get another up bar here and we close at 64, right, anytime the small triggers get to resistance, probably be able to pull this stop up to here. All right, if we get an up bar here, we'll have a new pivot and we'll just trail our stop and basically be locked into about 17 or 18 ticks. I'll put it there at 50 anyway, so if it doesn't go, we don't want to give up too much here. And you can see how the market comes back up and retesting these small triggers. If it keeps going up through it, it'll keep going. If it does fail from that area, then that'll be the end of the run to the upside. Anytime you're in really strong small triggers and your small triggers are on the outside of all of your synthetic trigger lines going up, pretty good chance they're going to make another push to the upside. Right, so if you're sitting there and you're saying, all right, should I hold on to my position? Should I liquidate my position? What should I do? This look, whether your small triggers are physically above all of your synthetic triggers and then small triggers are physically above all of your synthetic triggers, means that the market usually will keep going. Now you can see the small triggers are inside of the synthetic triggers, right? So if we get another pivot, then we want to get a little bit tighter on the position because of the synthetic trigger, small trigger location. If they stay inside of the synthetic triggers and we get another up bar, then we're going to have another stop trail to behind this pivot right here. And you can see, synthetic triggers above that Fibonacci resistance, small triggers above that Fibonacci resistance. So looking at our trigger lines, we're anticipating that this resistance is going to break and make it to the next resistance up here. And you can see our fib to fib oscillators come down to the 25 line again. If we can get a pivot here, all right, we'll have a nice sharp point off of the 25 buy line with our small triggers and our first synthetic triggers beyond this magenta resistance line. So as you guys watch, again, what we do is same thing over and over and over, which is, there we go, we got a pivot. Right, now as we progress through this, right, you can see we've got a double top here. And, if we get divergence, right, now you can see when your fib to fib oscillator gets back to the 75 sell line, we create the potential for a divergence pattern. So if we get down bars plus a tick, then this party will be over with divergence up here. If that's the case, then we'll start looking for next trades. You see how the small triggers didn't get back above my synthetic triggers here? We'll see if we can hang through that or if they're going to take us out here. But you can see the pattern in the fib to fib oscillator, hopefully. All right, overbought to the 25. When it gets back to the 75 sell line and you've got a double top in price, if it can't get through there and make the fib to fib oscillator continue to the upside, then we no longer want to have that trade on, because usually when you get divergence, it means they're going to stop out the lows and they could conceivably get all the way back down to 49 or 50. Now, if we do get another pivot to the upside with a big tail, again, we'll just be able to trail our stop up just a little bit more. And again, you want to be patient, right, when you get into a move from one fib trying to get up to the next bigger Fibonacci area. Right, as long as your small triggers, again, I'm going to repeat it, as long as your small triggers are above all of your synthetic triggers and you haven't reached the bigger targets yet, you just have to relax, right? Let the market make retracements, pull your stops up behind the retracements. It's just a sign of strength and momentum. Now that we've got small triggers inside of our synthetic triggers here, right, the cyan synthetic triggers, if we make a pivot to the downside, which you can see the reversal bar marker at 33.58, then that'll be enough to give us divergence and get us out of our position, and we'll start looking for some lower levels for the next buys if we get them. All right, you see we got a pivot there, so still in a divergence potential on our fib to fib oscillator. See how it stopped at the 75 sell line? So again, if it makes a reversal bar to the downside, we'll be out of the position. All right, now, you can see we've got our pivot here, small triggers and synthetic triggers above that magenta fib told us that pretty good probability we're going to break out and make it to the next fib. All right, so you can see we've got resistance up here at 84 and we've got resistance up at 95. So somewhere between 84 and 95 is where we're headed. If we get to 84, we'll be good with it.
Target filled.
There you go. Nice trade and nice stop trailing along the way. Target here. All right. Uptrend it is. All right. So obviously, allowing the market to work its way out of this area, right? So when you're thinking about, best area entries, location of my trigger lines is going to be key. Right? If my trigger lines are above all of my synthetic triggers, right, then I'm looking to get in a little more aggressively at the area. And if we get the area in, we start to get the bounce, then we'll be able to really reduce our risk pretty quickly above this, behind this pivot here. Yeah, it has a potential to go into chop mode if it doesn't take off out of here. All right, so as we trade back up into our small triggers, I've got 2 ticks worth of risk. So if it goes, obviously, we're looking at, a much bigger move to the upside, right? If it doesn't go, then, basically have one tick worth of risk. And if all goes well, we're going to go up to multiple time frame resistance at 65. And, that's pretty much the apology right up there. Does everybody understand this? I mean, obviously, this one is a little more conservative look than what I was doing over here, right? I think, as far as conservative looks, oh, that was my 20 ticks. So I guess I should typically take 20 ticks on the first one. Guess I missed that now. So you see, that was the 20 ticks there. So I'll take off the 20 ticks, and then we'll hold for multiple time frame resistance on the rest. So does everybody understand this entry right here? I think when you go back and look at it, obviously this one is a little more aggressive, short, right? And I think you can say that this one is a much more conservative entry. Guess there's no reason not to lock in ticks here at this point, getting closer to resistance. That's what you call the apology trade right there. And a couple ticks from, there we go. That's called the apology, right? Trying to go short, right? Maybe the large chart had me a little bit biased here. Obviously, this long is much more conservative, and as I said, there's nothing in the way on that one to the upside. Right. What do you notice about this multiple time frame resistance as we get up here? What's the first thing that you're looking at when you get to a multiple time frame resistance? Well, your trigger lines, right? What's the initial thought process on these trigger lines up here? Is this resistance going to hold potentially, or is it going to break? Right? Now, is it a trade setup to go short yet? Usually you like to see these areas get stopped out by just a little bit, and then you have an easier short trade. Right? Whenever the market's that strong to the upside, and big picture wise, obviously it's very, very strong to the upside. I think we were at what? Somebody give me the low of yesterday. Somewhere around 31 and change. And now we're at 34 and change. So that's a $3,000 move, 300 tick move to the upside, give or take. Right? Now, as Jerry is saying, notice your potential divergence on your Fib to Fib oscillator. Right? Typically for me, I like to see them stop out the high by a little bit and make divergence. Right? That's typically what they like to do, is ruin everybody's day who's trying to go short there first. So we'll see if they can stop out the high right here. I might have missed it. All right, so here's what I was doing. Limit order, trying to get short off of that multiple time frame resistance as the small triggers are coming down. I think I missed it. If you guys go back and look at multiple time frame support and resistance, you'll see this pattern happen a lot. And I was a little bit slow. Typically, I'll put a sell stop in at 63. As they retest the area, running a sell stop up below it, because I'd really like to be short from 63. I was a little bit slow on that one. So worst case, they're going to get back to the mid band, right? That's kind of the first, you know, even though it's not a real big target, that's kind of the first, 10 tick target if you were short at 63. They may take one more stab at it and get up here into this area one more time. But anybody who's studied the software, and if you're new to the software, I'm just telling you, you get a stop out without the trigger lines getting through on multiple time frame resistance. Usually that's a pretty nice counter trend trade short. Typically, the more experienced traders, and I like the same thing, to have a stop order that you're running up below the area as we get up into it. I think that's a really good spot for that counter trend trade short and the use of a stop order entry to get you in. Jerry, you're short from 60. Okay. All right. Winner, you're short from 59. I like it. Happy Friday to everybody. How's everybody? Yeah, that's okay. A little bit early, right? But I mean, this is textbook multiple time frame support and resistance trading right here. You get a breakout to the upside, right? You get a best look trade to take you up to multiple time frame resistance. You have multiple time frame resistance hit, and then you end up with a stop run and a failure for, counter trend trade short. It's a beautiful look. Snow, you got 60 to 42. All right. You guys feel free to post in charts if you get them. There was no divergence there, Mike. You're 100% correct. All there was a retest of Fibonacci resistance without the triggers getting through it, and that's why it sold off. There wasn't divergence there. So you're 100% correct in your read of that. I'm going to try to catch up on my chart here. So a small stop out reversal for multiple time frame resistance. All right, so let's talk about the entries, right? So at the best look long trade, limit order at the spot is the best. All right, make sure that makes sense, right? If you have a best look long trade with multiple time frame supports and a mid band and all that stuff, a limit order at the spot is best. Does everybody understand that? So we're going back and talking about the types of orders that you can use for your trading. Then you look at a second test of multiple time frame resistance. right? And again, this is my thought process on this. As they retest, wrong button, right? So you want to have limit order entries where this yellow line is right here for your longs, right? Then a stop order entry below your triggers and below your fibs, I think, is a prudent entry for counter trend trading if you're going to go counter trend after a second retest of multiple time frame support or resistance. Right? For me, I like to have them test the fibs twice. Right? So, if we roll our small triggers down and they're below the 165 right here, I don't want to go long into small triggers coming down at, you have to consider this is a resistance area. All right, so I know it's tempting to say I'm going to go long here again, and it may go up from there. But I want you to look at the difference between the left side over here. See how we were above everything? There was absolutely nothing in the way for this trade to go up to resistance. Do you guys see that? So this first best look long over here, nothing in the way. That's the perfect look for the perfect long trade. Right now, we've got sideways synthetic triggers here. So the answer is yes, I see this support. And yes, I see the synthetic triggers cross sideways. So I see it, but you also have a 165 in the way. You have your mid band in the way, which is magenta. And you have your small triggers coming straight down, which means, usually they're going to come down here and retest again. Do you guys understand that? So if you're looking at this going, well, that's the best look, right? And you're only focused on right here, and it may very well go up, but typically the bottom side of a 165 EMA and a mid band, usually with the small triggers wide to the downside, is going to push it down a little bit lower. Now, if we get divergence and we start to roll up, right, then, I do see the area. I'm just kind of playing devil's advocate on what is the trouble. If you're long at 25 with a 22 stop, you've only got a few ticks worth of risk. Right? If it goes, great. If it doesn't, you lose a couple ticks, no big deal. Hopefully, we've spent a lot of time on small trigger lines cross strong to the downside and what happens. So it just has that look like they want to come down here and test this low one more time, and then we'll see what happens. I just want you to really, really, really be able to recognize the difference between nothing in the way and really, really easy, and you got some trouble in the way. All right, so we're watching the market, obviously still trading to the downside here. And, as you can see, we're breaking through support. Right now, a lot of you guys in the educational room are saying, should we sell 34.14? And you've got really a couple choices here. Number one, if you sell 14, that's fine. Typically, when you just break through support by a little bit, you have to look at, you've got one level here to sell from, and then you've got your mid band and multiple time frame resistance here. Now, I want you to think about a concept for a second, right? I would like to run an 8-tick stop. So if I get in at 14 and I run an 8-tick stop, that's going to put me up here at 22.
Order pending.
Right? So if I get in, let's say at 21, right, which is kind of, this is the first part of the window. And if it goes down from here, then, probably going to end up missing the trade. Typically, the market, when it just breaks through a little bit, it's the old power and numbers situation, right? You've got one thing right here saying down, and you've got three things here. You've got a midband, right? Your magenta midband. You've got two magenta resistances. And more important to me is, my stop's going to be up here, right? So if I get short at 14 and I run an 8 tick stop, I'm basically going to be getting stopped out in a really, really sweet spot for going short, right? Now, there's two schools of thought. Let's say you sold 13 or 14, right? And you put a stop in at 16. So if they made a reversal bar, you'd be out. You'd lose 3 ticks, right? So if it takes off, that's not a bad scenario. And now your stop would be at 15. So you'd have 2 ticks worth of risk, right? Whenever we talk about, the different ways to get in, whether it's, getting in, this is a picture that we made the other day, right? You can get in at the areas you expect to hold, right? And the bad side of that is if it goes through it, you're going to take a loser, right? So when I look at this trade, right, here's my first profit target, right? Fibonacci support, and you can see you would have been out of that trade, right? And my second profit target is down here at 33.88. All right, so I always try to run two targets, one of them at, 20 ticks, give or take. So, 34 is going to be kind of first target, which is close enough to support here. And then second profit target at the second fib, right? And then obviously we'll manage very tightly if we get to profit target number 1. Oops, this is profit target number 2. Right, so, more important to me, if you got short at 14 and got bumped out for a couple ticks, right, you have to still be in the thought process that what? All of your trigger lines are below multiple time frame resistance, which means what? Which means we're probably going to get to the next multiple time frame support. So, see if we can get a fill here. And if we do, right, my stop will be in above the last line of resistance is 165 EMA. So in order for them to actually get my money, which they could keep going, right? They're going to have to break through not only this resistance, but this resistance, this midband, this resistance, and the 165
Order
EMA.
filled.
All right, so there's, the entry. And I expect them, they're probably going to go to 22 or 23. I'll get rid of that box now since you can see the area here. Clean it up a little bit. Right, I expected them to go to 22 or 23. They may go as high as 26 or 27. But I mean, this part of the window is kind of the meat between 21 and 23. Right, and it's, power in numbers. Right, you've got 3 things of resistance here versus 1 right here. Right, now look at the location of all of my synthetic trigger lines. Right, when they're really down and they're really below all of my resistances, I really go into that resistance expecting it's going to hold. So obviously we want to see a turn here. Now, when can we reduce this stop, right? 8, 9 ticks. When can we reduce that stop? And we'll talk about trailing stop logic again, right? we can reduce this stop if the area actually holds and we make a reversal bar. All right, so if we come down here and we get to 34.10 and make that reversal bar, that's when you trail your stop. Right? If I trail it right now and they go to 23 and then they turn down, I'm really going to be angry, right? If they bump me out on the high tick. Right, so when you've got a really good area, you just have to be patient, allow the market to marinate a little bit and let it do what it does. Right, because we've already said 21 to 23 is kind of where I expected them to get to, right? Right into this window. There's 22, I think, or 23, whatever that was. All right, so what we want to see now is we want to see them go down. All right, so you can see we're kind of knee deep right in that multiple time frame resistance. With all of my synthetic triggers down, with my synthetic triggers below all the resistances, which gives us the anticipation that resistance is going to hold for us. Right, so now we need the market to trade down to 34.12 and get that reversal bar. So you can see our reversal bar marker here. So you'll know exactly what price we're going to start making down bars. So once we get 34.12, we'll be able to take our stop and pull it down behind the pivot, whatever it is. So if it goes down now, effectively we'll have a 3-tick stop. Right? We don't want to move it yet. We have to just be patient and kind of wait for that down bar to actually happen. Right? As we get going, right, we'll have a trouble spot. Let's just call it a trouble spot. And a trouble spot's nothing more than, all right, keep going up a little bit. So now we got to get to 13. All right, so we're going to get to a trouble spot right down here at 34.05. Anytime you trade back into your synthetic triggers, we got to watch that area, and that market's going to have to get through it. Okay, so now we do have the pivot in place. All right, so we can trail our stop. So 3 or 4 ticks is what we're looking at for risk now that we've defined, a really good area. And as we trade down into this trouble spot, right, this is the point where you start saying, okay, no big deal. We'll start reducing our risk. I'll get it to a break even. Again, notice your fib to fib oscillator getting to the 75 buy line, right? This is our potential divergence pattern. Oversold up to 75, back to 25. All right, so if we get divergence, usually that'll end the party. So what we want to see is that fib to fib oscillator keep going through the trouble spot. All right, so there's your trouble spot. All right, so ourselves locked into a couple ticks here. Now, if we trade through the trouble spot, what do we want to see? We want to see small triggers push and get through the trouble spot. Right? If we can't get through the trouble spot and we make more than a reversal bar, we want to get out of that position. Right?
Target filled.
There's your first target. So we'll pull our stop down anyway. We'll get our stop down tighter. And you can see now if we make a reversal bar, see how I'm kind of using that reversal bar marker, tightening up on the position here. So if they come back to 43.03, we'll be out. If they make it to our second Fibonacci support, right? And, look at your trigger lines as you reach this area. Ask yourself one question. Is this a strong trigger line look to the downside? Should I hang on for more? Right? Because that's the question. And if you got out of all of them here at support, that's fine. That's a great trade. Right? But the trigger lines tell us that there might be a little more, so we might go to, the 88 support. The next one's way down there, so we won't mess with that yet. Right, so it's a function of, again, reading your trigger line. Should I stay in? Should I put some more money, keep some of my profit at risk? You know, if they come back up here, that's fine. They'll take me out, no big deal. That was close. You'll be surprised at how many times you get this really strong trigger line look to the downside, and the market will get one tick from a reversal bar and then head back down again. It happens a lot. All right,
Target
let's stop
filled.
down. All right, so we reached our target down here at Fibonacci support. That's a good trade. I'm going to show you the buy stop entry. Still anticipating this area being support and holding. Granted, that was my stop run. So I put in a stop order above all my fibs. This is the exact same thing we were looking at earlier this morning over here at the top. And it's an aggressive, you know, type of entry. If it works, it's great. Right? So, you know, this is the same thing we just did right here. A stop order entry on a retest stop out of multiple time frame resistance at the top. So we get all the way down to the bottom. Where the heck is that bottom? Let me get back to it here. And we get the same thing. A stop out of multiple time frame support. Should have left my original entry in there. I would have been better off, huh? And you can see that's what we're looking for. Divergence, a little stop out of multiple time frame support. You know, is it going to be the bottom, bottom, bottom? And is it really going to go all the way back up? You know, we'll see. Obviously asking a lot after a scorching downtrend, right? Tends to work a lot better after taking out the low by a couple ticks. Almost the exact same thing we saw at the high of the day. We'll see if they are nice enough to follow through. All right, Jim. Welcome back. I wish it was close enough that I could copy paste that, but I'll just write it out again. Multiple time frame support and triggers above support plus divergence All right, so there it is written out. Stop out of multiple time frame support, triggers above the support. So we start to kind of go into it with the anticipation that it might hold. Divergence on the Fib to Fib oscillator. And this is the first really long potential after, you know, here's where it happened if we were looking at a big chart. Here's where that same look happened at the top. And you can see, I mean, we went straight down 140 ticks or more. All right, so it's asking a lot, obviously, for reversal, but, you know, this is what happened the last time we got this set up on the small chart up here. I'm not saying that we're going to get the same thing going back up, but, you know, I've seen this more than once, and usually it'll at least give you an opportunity. If it is going to be the low, this is a darn good look for it. So we'll see if that's the case or not. Again, maybe not being greedy on the first. Oh man, hit my target. All right, does everybody understand this one? Right, the trigger lines initially said support's going to hold. One little tick down through it to stop it out doesn't dissuade me from thinking that support's going to hold. Right, and even a more conservative trade, coming out of this area the second time, small triggers getting above my support, everything rolled up. See if we can make it to resistance here. Guess within a tick away of it. Close enough. We'll get up tight on it. I can hit a target, can't I? All right, close enough for government work. Come on.
Target filled.
Okay, so we're trading up into resistance, right? We've already seen a couple instances of stopping out the highs.
Order
So,
pending.
as we trade up into this second resistance, and you'll see sometimes they'll hit the bottom side of the first resistance, right? And trigger lines are pretty strong here, so we didn't really anticipate this kind of down move, right? Usually they'll bounce down, and you'll see this pattern hundreds and hundreds and hundreds of times where you'll hit the bottom of a multiple time frame resistance, and then if the triggers can't get through the top end of that resistance, so we're really looking at right at this 94 area, right? If we fail without trigger lines taking out the top of the resistance window, right? This is a very common thing in most markets anyway, especially crude oil. They have a tendency to stop out the highs or lows by a little bit. And again, this is counter trend trading and going back to, the thought process for how do you enter, whether you enter at an area, whether you enter using a stop order, pre-reversal bar price, right? So as we stop out the last high,
Order filled.
we might have to risk a couple extra ticks on this one to get past resistance. Well, there's your down bar. All right, multiple time frame Fibonacci support, obviously, to trade for multiple time frame resistance with a stop out. All right, and if you waited for a down bar, in on a little pullback is fine. Now that we've got a pivot, right, we can define our risk. So we've still got a little bit more risk on this using a stop order entry. Right, and you can see kind of getting a little bit of a pullback here. So as long as maybe even a little extra risk on this, we'll leave it above the pivot. All right, so it's still a little bit outside, I like 8 ticks. This ends up being 9 ticks. So it's a little bit outside of the norm. Right, and as we start to push down and we get to, the mid band and the 165 EMA, we should be able to reduce our risk as we go here. So again, if we bounce up off of those areas again, probably not going to want it. So, get my reduction down. You can see synthetic triggers didn't break above resistance. Synthetic triggers at the top didn't break above the top end of multiple time frame resistance. Right, so we expect the resistance to hold. So we used a stop order for entry. Right, we had a little bit more risk than we normally like. But as we trade down, you can see we've got strong small triggers down, which is really good for short trades coming off of resistance, especially multiple time frame resistance. So this is kind of the third today. This one is a little bigger swing in between. The other two were much tighter swings, stopping out the highs with multiple time frame resistance. We can pretty much be risk free at this point. As we work our way down, you can see our synthetic triggers are coming down, so we can actually get to a profit plus, I think, on this at this point.
Target filled.
And there's the target at Fibonacci support. And again, at this support, just notice that your synthetic trigger lines are way above it. All right, so when you're deciding at support, should I take the money, right? If these trigger lines aren't helping you, right, regardless of what happens next, right, when these trigger lines are this far above your Fibonacci area, well, it looks like they're going to keep going. Never hurts to take that profit, right? And if we break through, then you can always work on getting back in again.